Good afternoon. It is November 3rd, 2025, and this is this week's Clubhouse Market Insider. Off to a late start today because volume and just overall activity is really picking up and starting to get a lot more calls, a lot more buyers hitting the market again. So let's take a look at a few things here. Mortgage rates recently hit the lowest levels we've seen in over a year. And buyers are really starting to feel some relief. And that's what I'm talking about here with a lot of this action we're seeing. But before you celebrate too hard, there's something important you need to know, which is lower Fed rates, which happened last week, don't automatically mean lower mortgages. Right now, the average 30-year fixed is hovering around 6.3, like we see here, a little bit closer to 6 and just under for different products like ARMs or FHA and VA government loans and things. It's really down almost nearly a full point from where we were earlier this year. So it's a huge win for buyers and refinances, especially anyone who locked in those high sevens back in the spring. We'll take a look at that here. So this is what they're talking about right here, 7, 7.2, and then here we are down here, 6.3, 6.2. So almost a full drop this year. But the key is that the Fed only controls short-term rates, not mortgages. Mortgages are long-term rates, 30 years. So the mortgages closely follow that 10-year treasury, like I like to talk about. So that moves based on what investors think the Fed will do next. So when the Fed made that last cut, 25 basis points last week, the market had already priced it in. And once Powell spoke at the press conference, rates actually bounced the wrong way to end last week and then to start this week too. So take a look at that. The 10-year treasury is at 4.1. We started to see a 3 on this just about a week and a half to 2 weeks ago. So moving in the wrong direction based on outlook of what the Fed chair has had to say. So now all eyes are on upcoming Fed minutes and then data like inflation data, jobs reports, and other really important monthly and quarterly reports that come out. Those will tell us whether inflation's cooling enough for another cut or if this recent dip might level off. So the ongoing government shutdown definitely affects the release of some of this data as well. So for buyers, this is your window. Rates are near 10-month lows, so affordability is stronger, and there's a chance to finally make your move and still get really good negotiations from sellers who are panicking a little. Maybe they're sitting on the market, but really nice priced homes, especially in DFW. If they're priced well, they are moving. But for those that might not be priced so great, there's opportunity to strike and take from them to get you a better deal so that you set yourself up on that long term, which is what real estate is all about, long game. But for current homeowners, this is the time for strategy, not just chasing lower rates, but finding the smartest long-term play to make your mortgage work for you and take what the market is giving you. So this has been your Clubhouse Insider. My name is Mark Thomas, Clubhouse Lending, and we want to help you stay ready to strike when the market does. So schedule your one-on-one review, and let's make sure your mortgage strategy is set for your next move. Have a great week, everybody.